We made it. I would say the biggest story of the week was the failure of gold. Everyone was looking for the breakout. Instead, we had a failure. As you can see right now, we're threatening a trend break. I certainly do not expect the kind of rallies that we had off the trend line a few weeks ago or here. Probably will be more like a hold or maybe a weak response. Um, Not expecting 34.40 to be taken out for a while. So uh, when I was under some market pressure from being short this day at 34.12 and it extended above it, that's why you reduce leverage and you use wider stops, especially in volatile markets like gold and silver, where the ranges have been expanding because of all the participation. So this is actually healthy for gold because it is a pretty crowded trade. Silver is even more crowded, but you can't fight the gold silver ratio, which still is saying that when you're bearish in metals, gold is your preferred short. When you're bullish in metals, silver is your preferred long. So I broke down the case that if gold breaks down and the whole formation from the highs on this triangle was about $400. So it's an aggressive target, but it takes you under 3,000 after a breakdown, should that happen. Minimum, I think we could see some type of equality. That would be something like the prior break that we had from a recent high back to this low, but uh, there still would be some downside. So I'm talking about this break from here. If we had something like this, probably take it a little bit under 3,200, maybe 3,200 here. So there's still some pretty good downside. And as crowded as this trade is, I still think that we have a shot for 3K and even a shot to panic some people under a big round number and maybe by September. So that's really the important story in the metals. So actually, there's a viewer who on Tuesday said he bought this trend line break the week before, and sounds like he's been paying attention and learning. He wasn't shorting it there, but he was taking half off up there. So I guarantee he's pretty happy he booked things up there um, above 3,400. So here we go. It still looks lower to me. I'm not in a hurry to buy it. Let's move to the currencies now. The euro's been the toughest and most resilient, and it continues to be today, just like, euro. That's why euro pound is doing what it's doing, making new highs. Looks like it wants to challenge this 90 high. Yesterday in the room, I put out a sale in the euro at 17.84, took partials for 26 pips. So break even stops if you want to carry it over the weekend. Maybe we get some follow through. Was talking about buying the dollar at the 61.8 retrace, took it out by a little. I think it's important that we're closing back above this 97.30 level. So I'll stay with it over the weekend. Again, I was bullish on. I said you had to buy breaks. We had that nice little pullback here to 46. You still have to buy dips. Think that we're going to take out this high. Similar situation that we had at the last high. Uh, doesn't have to recover as much as it did because it went down to 143. But I'm talking about that we had this confirmed high, and I thought that we would take out that high because it was confirmed, and we did. And when we did it, we confirmed the high again. So therefore, I believe that 149 will be taken out, whether we pull back or not. This has been, about a 200-point advance. So if we get a little pullback, you can buy the end looking for new highs. That's still my call on that. The weak sister has really been the British pound. So pound really gave it up. If you look at it and talked about it a few weeks ago, that it could almost look like a little mini head and shoulders. I talked about maybe a rally to 650. It didn't get there, but When you look at it here, left shoulder, head with a neckline coming in under the lows. So I think 130 is doable in the next several weeks or months, maybe even 129. So cable's still looking negative. There's your right shoulder. We could be threatening neckline pretty soon. Let's see, S&Ps, they're trading very quietly. We have made new highs, but we're even at new highs. We are diverging. The daily, not as much, but the NASDAQ definitely diverging. And the NASDAQ, as usual, like the last several years, leads on the way up and it'll lead a correction. I think there's a chance for a pullback to maybe 21.5. Even if these aren't the highs, you could look at the 4 hour in both of them, and there's pretty glaring divergence. Look at this. We couldn't even get up to 70 in the NASDAQ. That's a pretty glaring divergence. I don't need to use my cursor to see that we're not confirming. It's real obvious to the naked eye. And, we equaled it in the S&P. So, the RSI structure is saying the preferred short is NASDAQ. So we'll see what happens if we could get that. Even Henrik, who is a melt-up bull, and I recommend you watch his interview again. It was, one of the best we've had in a while. Said that the market is just too euphoric right now, too optimistic. And although he's looking for 6,800 or better, he believes that there's going to be some type of pullback to tamp down on this bullishness to set the stage for the next rally for this melt up. So something to consider. Maybe have your shopping list out. And I do just want to show Uber. Sometimes when you see formations, you'll get a lot of triangles or you get a lot of head and shoulders. But here's the look in Uber, which is open now. And you have a nice little head and shoulders pattern. Here, we're holding it again. I don't know if we're going to blow off, but if we get closes under 90, it's going to take it down to 82. Okay, and then we could form an even bigger head and shoulders, but I think that this is viable. What the narrative behind it might be reciprocal tariffs in Europe that is not only going to add prices to goods, but they're talking about tariffs that will affect tech. And Uber's trading like a tech company now. So that would be a problem for Uber. And you have to say that with everyone, I haven't talked to anyone, and I ask everybody what they think of Uber, and everyone likes it. And you have to say, with the market making new all-time highs, we're already 8-10% off the highs that we made a week ago. So you have to ask yourself, if Uber can't perform with a tailwind of a strong market lifting almost all boats, what's going to happen if we get a sell-off? And what I think is going to happen is a breakdown. So that's pretty much a wrap for the week. I just want to make one comment for you guys to think about, and it's regarding tariffs, since we're approaching another deadline. Was talking to my buddy, trader buddy and friend, Jim Welsh, and I asked Jim, I said, where were tariffs in the 30s under Smoot-Hawley? And they were 20%. Okay. They were 5% prior to the Tariff Act, and they went up to 20. So that was a fourfold increase. The only thing we weren't able to come up with was what's the percentage of world trade now? Back then it was about 11%. So the people that are, feeling good about only having 15% tariffs we're starting at a base from 2.5, which in magnitude is more than 4 times. So it really isn't, it's more relief that it's not 150, but it's still going to take a bite out of growth. So just something, a little historical perspective on tariffs. And someone brought up tariffs that President Reagan put on Japan. I haven't looked into that, but it's really not a big victory that it's only 15%. And with all the other add-ons, who knows what it totals up to. But it wasn't so good at 20% in the 30s. So that's a wrap for me, everybody. I hope everyone has a great weekend. Um, I know that there's a couple more things. Earlier in the week, I said, wait for a pullback in Bitcoin. We're getting a pretty good one. I was talking maybe 113, 112 into this moving average. This should be a decent level for buying Bitcoin. And then another request was the DAX. And I pointed out that last Tuesday, Thursday, that the DAX has not made a new high, which is different than it had been the prior 6 months. The DAX and European and emerging markets led the S&Ps. Maybe they're smelling a turn in the dollar because a lot of this was fueled by a weak dollar. So, this could be another sign of a dollar turn. We'll take it, of course, one day at a time, and you're always assessing and reassessing. But more than doing that, um, I want everyone to find at least one thing they're grateful for. If they had a low drawdown this week, you could be grateful for that you're in a position that you have risk capital to trade with. So very difficult to feel down if you find something that you are grateful for. So I'll wrap it with don't just count your pips, count your blessings. I'll see everyone next week. Um, Feel free to leave comments as well as requests for things you wanted me to look at. Someone said something about Canada. I'm not sure what they wanted to talk about, but I'll tell you the Canadian dollar certainly held where it had to, and it looks very good. I mean, this recovery has been pretty strong, and to me, it looks like it's more than just a bounce. Doesn't mean we can't pull back, but the dollar is, the fact that it held where it had to would just be, we held between 61.8 and didn't get down to 78.6, but we'll see. The big level and recapturing this 9720 is important. Getting back above 98 would break the downtrend. So that's it. I think I've remembered everything that people wanted my comments on and the picture to look at. So have a great weekend, everyone. I'll see you on Monday. See you in the room. Good hunting the rest of the day. Adios.